Welcome back. It's so great to see you. No More Rent TV channel here. I'm Kaitlin Endres. I'm a realtor in the greater San Diego area, and we're joined by Fred Witt, a member of my team. He has been with Movement Mortgage. He's actually been doing mortgages for more than 30 years, and you may have by this time actually seen some of our videos. So welcome, Fred. Thank you for being here today.
Hi, Kaitlin. Good to see you again.
Today, the video, this is a little bit more of a casual one, but it's all about what's the difference between a loan officer, a mortgage banker, a mortgage broker, a lender, bank, credit union. There's all these different names that all kind of mean who you're borrowing money from to buy a house. So I was hoping that you could clarify what's the difference between all these terms.
Sure, be happy to. So really, there's three basic entities, maybe four if you count credit unions, and they're all just sources for getting money to purchase a home. You've got your banks, which are federally chartered. One thing that's unusual about banks is the loan officers don't have to be licensed state by state. They're the only entity that doesn't. That can be good or bad. It's kind of up to you. Then you have mortgage brokers. Mortgage brokers are just like a broker in any kind of business. They're middlemen. They don't set the rates, they don't lock the loan, but they will find a source to get you your money. So brokers are a good necessity when you need them, which would be on unusual situations. There's something unique about the property because they probably have 30 to 50 lenders sources. So they'll find somebody that will do the loan. But if you're looking for conventional financing, mortgage bankers are kind of the in-between, meaning a mortgage banker is someone that lends their own money. We set the rates, we lock our own loans. Movement Mortgage is a mortgage banker, but we're not a bank, meaning we don't take deposits. We're still lending our own money off of our credit line, but we're not lending depositors money. And that's what a credit union does. The difference with a credit union, though, is they kind of have their own thing. They don't sell their loans, they lend their own money. But because of that, they can set their own guidelines. So sometimes they're tougher to get loans through, and sometimes they're easier. It just depends on the credit union and the time it is.
Is it affected at all if someone has a low credit score?
Mm-hmm.
Should they be more inclined to choose one or the other?
I would say no. If your score is under 620, you're going to have some problems. It doesn't really matter who you choose. But then at that point, if you are going to try to push a loan through with a below 620, then I would suggest seeing a broker because they'll have at least a source. Now you're going to pay a higher rate because that loan cannot be sold like normal credit with over 620 score, but it is an option.
Makes sense. The last thing I want to ask is so many times clients, they will hire a realtor and then that realtor will say, I know who to set you up with. Like I set them up with you.
Right.
So how would a buyer know? I mean, I know you're fantastic, but how would a buyer know ahead of time? Oh, I got a loan officer. Oh, I got a mortgage banker or broker. What questions can they ask? And then kind of how much does it matter?
Right. Well, it really can matter quite a bit. Think of a loan officer as like a project manager. So their job is to help you obtain this financing, help you fill out the application, let you know what documents you need, all those processes and steps, and then it goes through processing and underwriting. But overall, the loan officer is overseeing the whole project the entire time. So it is important to have experience and somebody that you communicate with well. So I would suggest that when you first talk to the loan officer, get a feel, make sure your styles are the same, that you're understanding each other, that they're answering your questions. What type of questions? Well, I would start by asking them, are you a direct lender, which means they lend their own money, or are you a broker? Because you do want to know how much control they're going to have over the situation. And as a broker, you don't have as much control. A direct lender, of course, it's your company that's lending the money, so you do. But it's really a personality thing, but also get a good feel that they do know the guidelines. There's a lot of people that are new in the business that if they make a mistake, it's going to hurt you more than anybody.
I think that's good information, and it kind of sums up how to choose somebody to basically obtain your money to buy your house. And Yeah, I mean, relationships are everything in this business and beyond. So
Right.
I hope that was helpful for you. You're watching and I hope that you know a little bit more about the backside of the lending. And of course, if you have any questions, you can reach out directly to Fred. You know, his information on the last one, it actually was opposite. I was pointing up
Yeah.
to the corner. So now I know point. It doesn't look like it now, but this will be the
Well,
information.
now I know what you were talking about.
Yeah, because it looks opposite. Anyway, guys, don't worry about it. But if you have questions, please feel free to reach out to Fred or to me. And until then, thank you, Fred, and thank you for being here. And we'll see you on another video.